Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, October 11th, 2010. This morning we're talking about Columbus Day calm. Now, here in the U.S., today is Columbus Day. There's also a holiday in Canada. I think it's Thanksgiving. They actually call it there. A little different than the U.S. Thanksgiving. But in any event, the banks here in the U.S. and the bond market is closed, which is having an impact on the currency market. It's going to be a light day today, as I'm sure you're aware that the banks are some of the largest liquidity providers in the Forex market. So the Forex market's still open, stock market's open today, but bond markets are closed, so that's going to reduce some of the correlative effects of the currency market as well. So that's kind of what we're looking at this morning. Not a ton of news out there. This weekend's G7 and IMF meetings came and went with hardly a mention. I mean, to be honest with you, I was digging around for news to find out, what the heck happened, and it sounds like it was largely a non-event. There was supposed to be some discussion of what to do about this brewing currency war out there, and really nothing really happened. China still held steadfast to their policy of we're going to increase the value of our yuan when we're ready, and meanwhile it's been reported that their currency reserves are now going to reach about $2.5 trillion. So think about that for a moment right there. That's $2.5 trillion that they have in reserves. Part of it is due to this unfair currency advantage they have, and meanwhile we sit here mired in debt. Granted, it's because of our own stupid spending, but something's got to give there to help get back to a little bit more global balance. So today, like I said, no news today. We've got some Fed central bankers speaking. We've got Jean-Claude Trichet from the ECB. He's going to be speaking, but I don't expect anything they're going to say to move the markets in any significant way. So the markets may trade with the stock market today, depending. Now, stocks have been higher as of late due to the hope that we're going to see some potential second round of quantitative easing here in the U.S., affectionately known as QE2. All right, stocks actually are starting the morning a bit higher. Stocks are higher in Europe. Okay, but what we have here is, if we look at the market, you can see that euro is a little bit lower here. Just looking at the 1-hour chart, it got back to 140 earlier in the day, and it looks to be trading in a little bit of range here, say 130 and 138.5 to say 140 and a quarter maybe. That range looks to be set up for a while now. Both the Aussie and the Kiwi are lower. You can see that also this is trading in a little bit of a range here, but Aussie was lower. They had some home loan figures that were mixed, which suggests that they may be able to hold steady on rates going forward. In New Zealand, we've also got the Kiwi, which is lower. Now, the Prime Minister of New Zealand, he came out and he said that a high currency exchange rate there for the Kiwi is starting to affect their exports, and that it's putting the RBNZ and the government in a difficult position. So that's kind of what we're looking at. We've got basically a little bit of dollar and yen strength. We've got weakness here for Aussie and Kiwi. You can see that a lot of these things aren't really moving too much here. We've got euro, which is down a little bit. We showed you a pullback from 149. We've got the pound, which is settling in just south of 160. So that's kind of what we're looking at now. I want to look at dollar yen here. Dollar yen, yen still strengthening. You can see the trend intact on the 1-hour chart. All right, got as low as 81.36 here. So this trend appears to be intact, and I'm not sure what's really gonna flip that around, because we're now waiting for this quantitative easing here in the U.S. So this could be a situation where we're buy the rumor, sell the news. All right, but in this case, everyone's selling the dollar, and maybe buy the dollar when the news comes out. So we're gonna have to see how that happens. But I can't think of a situation where further quantitative easing is going to be seen as positive for the overall economy here in the U.S. Sure, that cheap money and free money will make its way into stocks and commodities, which will go higher, but it's not going to cause businesses to hire any further. There's too many nebulous policies in Washington, D.C. that are seen as very anti-business. You've got the threat of higher taxes. Nobody knows what this healthcare bill is going to do, and that's what's really causing this jobless environment we're in right now. So we've got an election coming up here in about 2 to 3 weeks' time, and maybe that's going to change the political landscape in Washington, which will help back away from some of the more radical ideas we're seeing about what's good for the economy. So at least that's the hope in the markets. So today is going to be a light day, so just keep an eye out. There could be some volatility around some of these different central bank speeches coming out there, but I don't expect much to happen. So good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.